Hello and welcome everyone to my channel, The Quality Investor. It's been a few days since I've recorded an episode, and that's because I've been sick. I simply did not have the energy to research, write, or record an episode. Today, however, we are discussing the valuation of Tractor Supply, ticker TSCO. Tractor Supply is a very similar retailer to Home Depot and Lowe's, but has some pretty important distinctions. The most obvious is its size. Tractor Supply has a market cap of $23.5 billion versus Home Depot's mega cap status of $329.8 billion and Lowe's $118.7 billion market cap. Some other distinctions include their store location strategy and the type of inventory that they stock. Tractor Supply has a focused strategy of locating their stores in rural areas. At most, they will place their stores on the furthest outskirts of urban areas where suburbs transition to farmland. That may change in the future. As management has indicated, they will focus more on suburbs of metropolitan areas as they expand. From an inventory standpoint, Tractor Supply carries many items that you will find at Home Depot or Lowe's, but also carries more farm-oriented merchandise such as, tractor supplies, as well as livestock feed, farm clothing, and even little chicken hatchlings, and much more rural lifestyle goods. Tractor Supply has grown steadily since their 1938 founding to just under 2,400 stores today. That does include their PetSense pet supply shops. They are now the largest rural lifestyle retailer in the United States, S&P 500 member, and have an effective monopoly on this very niche market. And I love investing in companies with monopolistic tendencies. So before unpacking Tractor Supply's business model, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, please hit that notification bell so you can know right away when I post more stock analysis content. To understand Tractor Supply's business model, we must understand first their value proposition. Tractor Supply's value proposition is to provide a wide selection of quality goods for a rural and farmer customer base at affordable prices. They target customers that desire to live away from urban areas and are typically not served by the more mainstream big box retailers, what they call the out here lifestyle. They earn their revenue from retail sales, which they segment into 5 product categories. The category with the largest sales is livestock, equine, and agriculture, with 29% of sales year-to-date 2023, followed by companion animal products at 25%, seasonal and recreation at 22%, truck, tool, and hardware at 16%, and finally, clothing, gift, and decor at 8%. They seek to drive revenue growth through various channels such as online and mobile app sales and their Neighbors Club rewards program. Tractor Supply is investing heavily in digital sales. $120 million of its $773 million in capex was for expanding online platforms in 2022. Tractor Supply has an ambitious growth strategy over the next 10 years. They are on track to open 70 new stores in 2023, plan 80 new stores in 2024, and 90 new stores a year in 2025 and beyond until they reach their goal of 3,000 U.S. stores. They just completed the acquisition of farm and ranch retailer Orscheln, which has added $498 million in sales year-to-date 2023. This is 5% of their 6.8% year-over-year sales growth. This highlights the importance of new store openings for Tractor Supply's future growth. Aside from that, they want to expand and deepen their customer base with personalized and localized engagement with their loyalty program and heavy investment in digital sale offerings. They also want to increase their total addressable market by continually offering new and relevant products. They also want to expand through complementary acquisitions as opportunities arise. Any business worth investing in and holding for the long term must have some sort of economic moat that allows it to fend off the competition. Tractor Supply's primary competitive advantage is in the market they serve. They are the largest farm and ranch retailer in the United States. Their purpose is not to compete with the Home Depots, but to be located in markets where they are the only game in town. Many times, they are the only retailer for livestock and animal feed for miles around. It is, after all, their largest product segment. This market tends to be underserved by nearly all other retailers, thus making Tractor Supply the first and only choice for their self-sufficient rural demographic. They are also growing their pet-focused small box retail store, PetSense. It is a natural fit for Tractor Supply as many rural people not only have livestock but also many pets. Pets are big business in America, and PetSense seeks to be a premium pet retailer offering high-quality brands and services. They also have a veterinarian offering for animal care. PetSense also has a strong focus on animal wellness as they offer adoption services on top of all the other services that they offer. Now that we've discussed the qualitative side of Tractor Supply, what do the numbers say? Are they overvalued or undervalued in today's market? Let's dig in. Tractor Supply has a very impressive track record for growth over the last 10 years. This includes the COVID years, where the rural areas were a little bit more resistant to lockdowns. As we can see on the chart here, revenue per share, operating income, earnings per share, free cash flow per share, and dividends all have impressive growth. They have grown their revenue per share by an impressive 14.7% per year over the last 10 years, and the all-important free cash flow per share by almost 13% a year in the last 10 years. They also pay an impressive dividend and has grown very nicely over the last 1, 3, 5, and 10 years. And coming over to their charts, looking at their history here on a quarterly basis for the last 10 years, we can see the impressive growth, almost uninterrupted for Tractor Supply. Beautiful growth for revenue, gross profit, net income. Ideally, we would like to see their SG&A and their operating expenses, the margins at least, to come down a little bit. However, they have been remarkably consistent over the last 10 years. And they've also have an impressive share buyback program. As you can see, they almost continuously buy back shares every single quarter. In order to project Tractor Supply's future growth, I took what their management said regarding new store openings over the next 10 years and scaled that up on a bull case to 3,000 store openings. And then I also projected, based on a combination of what management has said and analyst estimates, what their sales per store growth ideally will be over the next 10 years. Using the bull case, we see revenue growth compounded annually at 5.83% for the next 10 years. Once I take those numbers and drop them into my growth model here, I am also projecting an operating margin increase up to 11% over the next 10 years and free cash flow conversion to reach about 94 cents of every dollar of net income over the next 10 years. That gives us a final tally here of operating income growth of 6.7%, net income growth of 6.75%, earnings per share growth of 9.2%, and free cash flow growth, the all-important free cash flow, of 12.9% annually over the next 10 years. So dropping all of those numbers into my discounted cash flow model and then discounting it back at a discount rate of 8% with a exit multiple here of 3% for perpetual growth rate, I get a discounted cash flow price of $232.48 for Tractor Supply. And coming over to my dividend discount model, we can see that impressive growth Tractor Supply has had in their dividends. They are projecting for the rest of 2023 a total dividend of $4.12 a share. And using a 12% growth rate for the next 5 years, based on my bull case, and a perpetual dividend growth of 6.5%, that gives us a dividend discount price of $310.60. And finally, the exit multiples model I have as my comps: O'Reilly Automotive, Genuine Parts, Napa, Casey's General Stores, Home Depot, and Lowe's. And once you average their PEs, we get a 19.66 average PE of those, and applying that to the earnings per share for Tractor Supply, that gives us an exit multiple price $201.32. So coming over to my investment summary page here, we can see that right now Tractor Supply is pretty much batting average. Their trailing 12 PE is 21, just a tick under their 5 and 10 year averages, and their forward PE ratio is just about average for their 5 and 10 year. And on the profitability side of things, their gross margin and operating margin are above their 5 and 10 year averages, but are very close indeed. And the return on invested capital, as well as the return on capital employed, are actually below their 5 and 10 year averages. So we have a valuation model here of discounted cash flow price of $232.48, dividend at $310.60, and the exit multiple price of $201.32. And what does all that give us? Well, using our bull case here, we have a valuation average of $244.22, which is a potential upside of about 13.4%. And when we apply our margin of safety of 20%, we get an acceptable buy price of $195.37, which is a weight recommendation. All in all, I do think this is a pretty fair valuation for Tractor Supply. Given their current share price of about $215.30, I do think that the market has priced them pretty fairly. If we look at the base case, however, we do see that our acceptable buy price does drop to $181. This is basically saying that management is not going to open the stores at the clip that they expect to open the stores. And of course, if everything does go wrong and we have our bear case here, then our acceptable buy price becomes $169.36. If, however, you do feel that 20% is a tad high for your margin of safety, let's drop that down to about 10%. We can see when we drop it to 10%, right now, Tractor Supply is a very good buy, but it probably won't be for long at $219.80. You can see here that their 3, 5, and 10 year average returns are above what the S&P has returned over the last 3, 5, and 10 years. So if Tractor Supply can execute on their growth strategy, it is reasonable to expect that they will also achieve better than S&P 500 growth over the next 10 years. So Tractor Supply is a pretty steady business and has good prospects of growth for the future. However, for me, I would like to wait a couple more quarters to see accelerating growth in their retail business for me to be comfortable of lowering that margin of safety to about 10% and investing in Tractor Supply. But before we go, I do want to remind everyone this is not financial advice and I do not own any stake in Tractor Supply. With that, thank you for watching today's video. And what do you think? Is this a fair valuation of Tractor Supply? Let me know in the comments below. And finally, please hit that like button. And if you found this info helpful, subscribe to the channel and join our community. Thank you and happy investing.